1.4 billion people. That's the staggering number of individuals who just gained access to a financial tool that could reshape the global silver market forever. While most of the world's attention remains glued to Wall Street's latest moves or the Federal Reserve's next policy announcement, a quiet revolution is unfolding in India, a revolution that's sending shockwaves through the precious metals industry and causing panic among U.S. silver dealers. This isn't hype. This isn't speculation. This is a seismic shift in global finance, and it's happening right now. Imagine the impact when a country with 1.4 billion people suddenly opens the door for its citizens to invest in silver IRAs, individual retirement accounts backed by physical silver. For decades, silver has been a cultural staple in India, used in jewelry, religious ceremonies, and as a store of value. But until recently, the average Indian investor had limited access to regulated, secure, and convenient silver investment vehicles like IRAs. That changed overnight. The Indian government's recent regulatory reforms have paved the way for millions of middle-class Indians to invest in silver IRAs, backed by physical silver stored in secure vaults. This means that instead of buying jewelry or coins with high premiums and storage risks, investors can now allocate a portion of their retirement savings into silver, a move that's expected to unleash unprecedented demand. And here's the kicker. This demand isn't just theoretical, it's already happening. U.S. silver dealers are panicking. Why? Because the physical silver inventories that once seemed abundant are now vanishing at an alarming rate. The silver bars and coins that used to fill vaults in New York and London are being shipped eastward, heading to India to back these new IRAs. The result? A supply crunch in the West, rising premiums, and a disconnect between the paper price of silver and the actual cost to get your hands on physical metal. Let's break down why this matters to you, whether you're an investor, a retiree, or someone simply concerned about protecting your wealth. Silver is not just a shiny metal. It's a critical industrial commodity, a hedge against inflation, and a proven store of value through centuries of economic turmoil. But unlike gold, silver's market is much smaller and more volatile. This means that shifts in demand or supply can cause dramatic price swings. And right now, the biggest shift in demand is coming from India. To put this in perspective, India has historically been the world's largest consumer of silver, primarily for jewelry and traditional uses. But the introduction of silver IRAs changes the game. It transforms silver from a cultural asset into a financial asset, accessible to millions who previously had no regulated way to invest in it. This shift is already draining physical silver from Western vaults. Dealers in the U.S. report that their inventories are at multi-year lows. Premiums on silver coins and bars have surged, sometimes reaching 30% or more above the spot price. Delivery times have stretched from days to weeks, and in some cases, months. Why is this happening? Because the silver market is global and interconnected. When demand surges in one part of the world, it affects supply everywhere else. The silver that once sat in U.S. vaults is now en route to India, where it will back millions of new retirement accounts. This creates a dangerous illusion for many investors watching the paper price of silver on their screens. The spot price might appear stable or even declining, but the physical market tells a different story. The real price, what it costs to buy actual silver, is rising sharply. This disconnect between paper and physical silver is not new. It's a pattern we've seen before in precious metals markets. But the scale and speed of this current shift are unprecedented. And it's not just about India. The global silver supply is already tight. Mining production has plateaued and industrial demand is soaring, driven by green technologies like solar panels, electric vehicles, and 5G infrastructure. These technologies require vast amounts of silver, further tightening the market. So what happens next? The U.S. silver market is entering a critical phase. Dealers are forced to scramble for inventory, premiums continue to rise, and retail investors face higher costs and longer wait times. Meanwhile, Indian investors are quietly accumulating silver through their new IRAs, building a physical position that could rival some of the largest holders in the world. This is a classic wealth transfer in the making, from Western paper holders to Eastern physical holders. If history is any guide, the consequences will be dramatic. When physical demand outstrips supply, prices spike. Short squeezes can occur, and those who fail to recognize the shift risk being left behind. In the next part of this video, we'll dive deeper into the mechanics of India's Silver IRA system, how it's structured, and why it's so attractive to millions of investors. We'll also explore the timeline for when this demand will hit the retail market in the U.S. and what you can do to position yourself ahead of the curve. But before we move on, let's recap what we've covered so far. India's regulatory reforms have opened the door for 1.4 billion people to invest in silver IRAs backed by physical metal. This has triggered a surge in demand that's draining physical silver inventories from Western vaults. U.S. dealers are panicking as premiums rise and delivery times lengthen. The global silver supply is tight, with industrial demand also increasing rapidly. The disconnect between paper silver prices and physical silver costs is growing. This shift represents a major wealth transfer from Western paper holders to Eastern physical holders. If you're watching this, you're already ahead of most investors who are still focused on stock market headlines or crypto hype. You're seeing the pattern, understanding the forces at play, and preparing to act.